Stocktwits Nation. It is Wednesday, July 2nd. We have an amazing show planned for you today. Shay Boloor here as always, and the talented Tom Bruni, the editor-in-chief of Stocktwits. We will also be joined shortly by Ben Horney, who is the deals reporter at Front Office Sports and has been tracking the prediction markets very closely alongside other headlines at the intersection of sports and business. So stick around for that. That's going to be a lot of fun. But guys, how are we feeling heading into the holiday weekend? Shay, I know you just looked at your phone and were excited about something. Do you want to share what prompted such a response?
Yeah, so as you guys know, I did a couple TV appearances yesterday. I was live saying I do think tomorrow will be kind of by the news on better than expected delivery numbers. So for Tesla, I think the street wanted 385 to 390. I think that was the range. It's different depending on what shop you see it at. I was like, I think anything above 380 would make that name catch a bid. What did we get today? We got 384, and I think it highlights that it was actually better than feared, and especially when the narrative on Tesla isn't that they are this EV company, that they're actually going to be transforming into this AI and software name. Like they are truly trying to build the operating system for physical AI, building that AI network for mobility and robotics. That these delivery numbers are cute. They're okay. They're a good snapshot of health for what the business used to be, not what they're becoming. So I call them like, all right, these delivery numbers are them delivering the past, but not building the future. So I think that this print was essentially good enough. I think clearly a couple weeks ago in Austin, we got signs of how transformative autonomy is going to be in the whole automotive industry, where Tesla's trying to remove the one-time transactional component of buying a car, where, all right, it's a one-time hit, this is the gross margins, etc. Like they're truly trying to turn every vehicle into a node in a global AI learning network that's going to train their Dojo brain, that's going to kind of scale their robotaxi. Like they truly are trying to lay the groundwork for a full stack robotics OS. So I think that anything that's like a Band-Aid like print, like this was a slight miss, but it was a good enough. I think it's going to catch a bid, and especially when the junior high fights that we just saw this week caused this name to go down 10%. I think there's some fear that Tesla's Robin, like I forgot his name is, but he left the org, and he was essentially, is that a pre-read of like, dang, the delivery numbers must be really bad? That was not the case.
Yeah, it looks like the headline I'm seeing is they had an 8-month losing streak that they snapped just by the skin of their teeth. So like you said, Shay, a Band-Aid, and of course coming off of the ongoing arguments going on. Tom, any thoughts on Tesla based on what you're seeing in the community, what people are saying? I know Shai's got a very clear point of view that he's focused on the future, but from what you see in the Stocktwits community, are some Tesla holders still watching these EV deliveries closely?
Yeah, I mean, this is still their core business. Obviously, those who are holding the stock long term are believing kind of that longer term vision that's going to support the valuation and the premium that it's trading at. I think right now we're just kind of in this range bound trade. The recent lows were near 270, 280. The highs were near 365, 380. So we've got this 90-point trading range that we're kind of stuck in. So until that resolves, traders are taking advantage of this opportunity to buy the lows, sell the highs, and just kind of trading the range until we get a decisive break here. I think what's unclear is what the next meaningful upside catalyst is going to be. I think the headwinds from Trump and Elon kind of going at it daily in the headlines is a big one. So if we can get some clarity around that and just kind of have those tensions ease off a bit, I think that will be a meaningful tailwind for the stock going forward. But I mean, overall, technically, we're range bound for right now. So until we get that breakout or breakdown, there's not really a whole lot to do. It's a range bound trade.
So I will say I agree with what Tom's saying, by the way. And this is coming from an Elon fanboy. So
I love how you always disclose that before.
I have to, because like I am a big fan. He's like kind of my
Yeah.
idol on the innovation front on his innovation front.
Yeah.
But I think that the ceiling on physical AI is absurd. Like absurd. There never has been a TAM of what physical AI is going to essentially disrupt. Knowing that is where Elon's North Star is conquering this physical AI space through robotics, through autonomy. And he shoots 100%. I think it's inevitable. Optimus and autonomy is going to be what he envisions. Nobody knows the timing of it. That heartburn of when is what's causing this range-bound trade. But we've seen what happens with a stock that's a great narrative, a great story, that's disruptive in a dinosaur industry. What happens once their proof of validation gets stamped, aka Palantir, aka Robinhood? They don't just run, they 5x. They re-rate aggressively after a multi-year long basing. That's the thing about Tesla, where I'm not selling any of my shares. I'm not adding. I think it's a 5% position now still, but I think it's a hefty enough position where if my thesis is correct, it's going to run not just 50%, not just 2x. I really think this is going to be like what Ives is saying, like it's going to be a transformative re-rating. And I think it's okay to, when the market's running the way it's been, Tesla's kind of not been catching a bid. You can buy Tesla the same stock price it was 4 years ago. How many stocks can you say that about that's as disruptive as what Tesla's trying to conquer right now? Not many. Probably on one hand, I can count on how many names you can buy 4 years ago to right now with disruptive technology. So having that mentality, it's really important because you have to play the long game. That's just at the end of the day as a Tesla shareholder. And these delivery numbers are cute. They maybe put the Band-Aid on, but I think everyone who owns Tesla right now is owning it for something completely different than car delivery numbers.
Which is such a fascinating. Oh, sorry. Go ahead, Tom.
No, I was just going to add, the big question is how much of the current valuation and premium that it trades at versus other car makers is already pricing in kind of that future perspective. So that's kind of why we're seeing the stock at the same level it was 4 years ago, because we had this massive run. We were pricing in basically that, Tesla was going to cure cancer in many regards. And the last 4 years have been the company's fundamentals trying to catch up to that narrative. So for me, as a more technical and fundamental guy, I like to combine the narratives and what I'm seeing in the charts. Until we get decisively above those 2021, 2022 highs, I think that'll be the inflection point to signal, okay, the street is seeing enough for this to have that next leg higher where we can see the valuation and stock price really accelerate.
And to add more color to that too, like the cancer got me thinking. There's such a win-win because I don't know what amount of deaths there are every year for DUIs, but I think society as a whole would benefit substantially from a robotaxi at scale, just based on that one factor alone. DUIs cause a ton of deaths. Cancers cause a ton of deaths. Like I think doesn't matter the Trump-Elon feud, like they need each other, and the government and society needs Elon to conquer this autonomy vision because Waymo is a clear leader, but you can't scale Waymo. You can't at the scale to make it actually beneficial and transformative in everyone's lives on saving lives via DUI. So like, I think there is an angle there that isn't talked about much where it's a real big W for society as a whole.
Yeah, I would agree with that. I think, and what's interesting about not Robinhood, but Tesla, when you were describing it, Shay, is I can't think of many stocks where you're holding it with conviction now, thinking that the company is going to be completely different in X years. Like I can't think of a comp for that. Can you? Like,
yeah, I could because they're still down. Those comps I have, like they did not turn.
What are the comps?
Unity's like literally.
Okay.
So Unity might be the one example for me that I learned. I was like, I'm too emotional about my holdings. Like I treat them as relationships, And because they have such a duopoly in the gaming engine space, it's like I think gaming is going to change completely in the AR VR world, and they have a duopoly. I love monopolies and duopolies. They had a bad captain that ran that ship. They got a new one a year or two ago, but it's going to take a couple years for them to really trim that fat that the previous idiots kind of did on that organization. So I think for me, like Unity, like I had an option between Unity and AppLovin 3 years ago. Look at their stock prices. Unity is catching a bit now a little, but AppLovin's like a 10x. That's a perfect example of like maybe holding a stock on a narrative change can really bite you in the tushy, because AppLovin is a perfect example of like I miss a 10 bagger.
Yeah. And you mentioned in the context of Tesla Robinhood, and we talked about it quite a bit yesterday, but Tom, I know you shared sort of like a piece about Robinhood and the state of retail investing and how you see it from a Stocktwits perspective. Can you share a little bit about just generally how you guys see it? Because you guys have been at the center of this for years. And I know the CEO Howard was a very early investor in Robinhood.
Yeah, I think it really comes down to who's building the tools and functionality and the overall experience that retail investors want. And despite all of the headwinds that Robinhood faced during the GameStop era during the pandemic, I know they got a lot of flack for how they handled that. And Vlad even said that himself. I believe it was either in your interview or the one with Howard. It's basically like we did not handle that situation properly. But compare that to 3 days ago of him being in France with announcing their crypto thing. It's a complete like 180. You think you're watching like an award show or something. So I think they've got the experience, they know what customers want, and despite people who are still sour about what happened years ago, the numbers speak for themselves. People are still using Robinhood not only for trading but for their larger wealth management needs. And so, yeah, I think, any stock like that is going to have some kind of controversy around it. People are going to love it. People are going to hate it. But I think the numbers speak for themselves. Look at Robinhood compared to Webull or some of the other names in the space, just how their stocks are trading. And I think the narrative is quite clear that people believe Robinhood's going to be the big winner. The one thing I will say from a technical perspective, though, it is very stretched here. I think we're 50% above its 200-day moving average. So like if you're trading it, great. If you've bid long, great. But like if you're just adding it here, we're seeing some caution from the community around like valuations and how much it's run, whether or not they should be adding here. So.
Yeah, I when I watched the video of it, it felt like it was like a James Bond movie. But I think when I agree with you, Tom, where people hated them, and I think we talk a lot about just like attention spans and resiliency of the market, and it's like people just do not give a good goddamn what happened last quarter. Like it's like there's so much stuff happening. Like I don't even think if you did a sentiment check of Robinhood, I don't think it's even like an Uber Lyft thing where they're still I think everyone's like, you're either like, yeah, they're crushing and I use it, or you're like, eh. But I don't know if people hate them anymore. Like that just completely, I don't know if I'm like in the wrong circles, or you hear things differently, and even in your world, Shy, but I feel like that like stigma with them just seems to be completely gone.
I mean, part of that is nothing changing sentiment like price. I mean, when you're winning, you bring out all the the positives. Believe me, if they have a 20-30% drawdown in a short period, then the haters will be back in mass and calling the story lame. But sorry, Shy, go ahead.
No, I was going to say you nailed it. I mean, dollar bills, more of them in pocket, they can change their minds. Like Tesla, when Tesla hits $1,000, I guarantee the narratives can completely change on Elon. It's just that's how the game works. Vlad, even Zuckerberg, Meta was kind of during that metaverse pivot. Everyone hated him, especially with all that. I forgot what was happening in the Senate, or like he was on spotlight of invading everyone's privacy and trust. Stock prices going lower and lower. Like people really did not like him. Now he's on the Mount Rushmore of CEOs again.
Yeah. Just pictured his head on Mount Rushmore, which was funny. So Robinhood, this is a good segue into our next guest, because Robinhood obviously unveiling prediction markets powered by Kalshi a few months ago. We're going to bring in Ben Horney, who is the deals reporter at Front Office Sports. Ben, welcome to the show. It's great to have you.
Thanks for having me. And yes, great segue.
We love the sports angles. Shy and I sometimes bring up sports. It's usually like an analogy to something else. Yesterday we made some Jets jokes. But tell us a little bit about, front office sports. What do you guys cover? And sort of what do you focus on as the deals reporter? And then I really want to get into some of your reporting. I'm sure these guys have a lot of questions for you as well.
Yeah, so front office sports, the business of sports, that's, our North Star. And there's a lot to get into. I mean, the business of sports, I think people are a lot more interested in now. Everyone talks about what's happening on the field, on the court, but there is so much money in sports. Contracts are going up, media rights deals are going up. There's all kinds of things to dig into. So my specific role, I'm the deals reporter, like you said, that runs the gamut. You have the Lakers being sold at a $10 billion valuation. You have investment in all kinds of European soccer teams, other sports, NFL allowing private equity into the fold. And then you have prediction markets, which is what we're planning to get into today.
Yeah, and Tom, last time you were here, we talked about them, and I think you made the point, and we were talking about Kalshi and Polymarket, and sort of the differences between who's got a little more leeway and sway in the U.S. Versus the other one. Ben, can you give us a quick breakdown of these two companies, because it's fascinating? They're the same age, they're in the same city, they're doing the same thing, and they like raise money at the same time.
So the big difference is that Kalshi is the only federally regulated prediction market in the United States. So they are regulated by the CFTC, the Commodity Futures Trading Commission. And that's kind of what all the controversy or this whole thing boils down to, is that they claim that they are under the exclusive jurisdiction of that federal regulator, which really allows them to operate throughout the United States. And just to go back to like what they even are, because I always find myself having to explain what this is to my family and friends. So these prediction markets, they offer users, like anyone can do it. You can create an account and you can trade on the outcomes of events. So with Kalshi, the original things that they had people trade on was like, will there be a recession this year? Will the temperature be higher than 70 degrees in New York City? Just ranging from serious to fun. Last year, they started offering event contracts on the outcomes of political events, notably the US presidential election. That caused some controversy. That kind of led us to where we're at here. There was a lawsuit with the CFTC under former President Biden, and Kalshi won. The courts ultimately decided that the government could not stop them from letting people trade on who will win the presidential election. And then, I mean, I could keep going, but
yeah, no,
I'll stop there.
So I actually have a question for you, Ben.
Yeah.
I'm a very much a TradFi guy, but I love disruption. And I think Robinhood's events kind of showed some early signs of maybe what the future world's heading towards, where it's called the tokenization of real world assets. It got me really thinking, if real world assets, I want to be a Park Clipper owner, for example, or I think this rookie is going to be freaking explosive. I think Cooper Flag might be the next Larry Bird, for example. I want to be able to invest in that kind of asset. Do you
Bold
think?
take.
We'll see if it works. But I think that is there a future where you can actually start investing in real world assets via teams and people? And I think that is this the first sign of that moment for real world assets where you can actually Joe Schmoes, Jane Schmoes can actually invest in them?
It's a good question. I mean, with technology advancing the way that it is, I think that the opportunities are kind of limitless. And this is a good showing of these sorts of things were not available very recently. And now all of a sudden, if we get into the sports contracts, which Kalshi launched in January, suddenly sports betting, which was limited, to state by state regulation, suddenly you can trade on the outcome of sports events in all 50 states. It's a big deal because sports betting was federally illegal except in Nevada and some limited things with regard to lotteries for many years, decades, until 2018. There was a Supreme Court decision that struck down the law prohibiting that. And since then, it's been piecemeal, state by state. They are opening it up. I think it's 39 states now and Washington, D.C. that offer some form of legalized gambling. And then Kalshi came in and, this is what's going on in the courts. They're claiming that it's not technically sports betting, it's trading on the outcomes of sports events. But in all 50 states, you can do it. So, Shay, to your point, what's next? I mean, I would not be surprised if there's some company or group that starts allowing you to do that sort of thing. In terms of normal average Joe Schmoes investing in sports teams, I mean, that already is starting to be more of a thing. I've written a little bit about there's like crowdfunding efforts for European soccer teams where you can buy stakes and become a part owner in those teams. That hasn't really come into play in any of the major US sports yet. There's only a couple of teams that are publicly traded, but yeah, I wouldn't be surprised if that happened.
So I gotta hop off right now, but I will say when that does happen, I will be buying some Daily Rip tokenization assets. Nice meeting you, Ben. Enjoy.
Same.
Shy, have
Thank
a
you.
good one. Yeah, I mean, well, Ben, it's like the Packers are looking pretty innovative because they
Yep.
allow that to some degree. I mean, do you think? I think just from the sense of this management, though, it almost has to be similar to kind of what we see on our side, Tom, of like the powers that be with this happening must be freaking out because all of a sudden, if you own a sports team, you're calling all the shots. If all of a sudden it's like crowdfunded, like that's scary. Do you think
Well, it's
the
taking-
owners are freaking out a little bit?
It's it's always scary, I think, for the people in power, for any of that power to be taken out of their hands, right? But at the same time, I think there's something to be said about giving some power to the people. And there are a few major pro sports teams that are publicly traded. The Atlanta Braves were spun off a couple of years ago by Liberty Media. Manchester United is, an example of like a major soccer team that's publicly traded. And then I recently wrote about MSG Sports is a publicly traded entity that owns the Knicks and the Rangers. So technically you can invest in the Knicks and Rangers, but they're bundled together. So you're kind of an owner. But yeah, it's going to be interesting to see if more power goes to the people with some of this stuff.
Yeah, I'm curious if they take more of the AMC route where they provide their shareholders with like perks when you attend a game. Maybe you get like discounts on stuff, discounts on merch, exclusive things, as opposed to like, hey, let's all vote on who's going to be running this team next year.
Pick.
So yeah, exactly.
It could get complicated if you have, thousands or millions of people that are voting on every decision. That's why historically in any kind of thing, it's like you want to have people that are in charge who make the decisions.
Yeah. And Ben, real quick, I feel like I should know this, but why is it that Kalshi has more regulatory leeway in the U.S. Versus a poly market? Is it
So
what they're
they
doing
under-
different, or they're just better relationships?
They undertook a process to get regulated.
Okay.
I think that they wanted to do that. I've listened to some interviews with their CEO and some other, and read a lot about them. They basically decided that this was a good idea. They wanted to get into the U.S. market, and so they took whatever steps to be able to be federally regulated. They seized on the CFTC as that regulator, and that's kind of what they're leaning on right now. Is that the CFTC has exclusive jurisdiction. We did what we needed to do to get regulated by them. And the federal regulator has more power than the state regulator. So their argument is that, sorry, state regulators that aren't happy with this, talk to the CFTC, basically.
And is Polymarket now trying to do what Kalshi did, or are they sort of resisting and being like, no, we're off limits, we're something else?
I haven't seen that they are trying to get federally regulated, but it's an interesting question. I mean, it does seem like Kalshi has a real head start here with this, which kind of speaks to, I think you touched on this before, they both recently raised money. Kalshi raised, this was last week, I believe, Kalshi raised $185 million, and it was at a $2 billion valuation, a round led by a venture firm, Paradigm. Polymarket raised a similar amount of money, but they were at a $1 billion valuation, I think. And, this is just my speculation, but I would guess that it has to do with Kalshi's position here in the United States.
Yeah, more easily integrated. Go ahead, Tom.
I almost feel like this is a Coinbase versus Binance situation taking shape again, where Binance captured most of the international market because they were dealing with like unregulated waters. And then Coinbase was like, no, we're going to work with regulators, become the official kind of crypto exchange of the US and then expand outward from there. So maybe we see a similar situation here.
Yeah, I think that's
Yeah,
a good
it
point.
feels similar.
Interesting. So, on the topic of sports betting, and I wanted to get your take on what's going on with Malik Beasley, Ben, and for people following. I mean, this is a headline I see, and I'm just like, what are you doing? But what's going on with him? What's the latest there? And do you think this is going to be more of a? Do you think this is the beginning of a trend where they're going to start surfacing more of things like this happening in professional sports?
Yeah, so Malik Beasley, NBA player. Last year, he was on the Detroit Pistons and he had one of his best seasons. He averaged over 16 points. He shot, I think, 43% from three or something like that. So, kind of a sharpshooter type guy. He was in line to get a big contract this summer. And then it just came out, I think it was on Sunday. ESPN reported it first that he's under a federal investigation for sports betting related allegations, and the allegations stem from the prior season. I think it was when he was on the Bucks, and it has to do with prop bets. So bets, not on the outcome of the game, but Malik Beasley will hit more than 7 3-pointers. This is causing him some problems because he was reportedly in talks on, like I said, a big contract, like a $42 million contract with the Pistons. And now that's in question. The Pistons signed Duncan Robinson, I think that was yesterday, uh, seemingly kind of to replace what they were going to have with Beasley. And Beasley, we could get into it. There seems to be a lot of troubles coming his way. He's involved in a lawsuit with his former management. There was a story in some local Detroit press yesterday about all these other headaches that he has, where he apparently owes money to a barber and his dentist. In the lawsuit, which I wrote about yesterday, his management, this is before the sports betting thing, his management said that they were in talks to settle that case, but that it depended on his financial liquidity, which they said is tied to him being a free agent. Now is he going to get a contract? But so to answer your other question about whether this is going to be a trend, it already is a trend. Since sports betting has opened up, there's now been, from what I know, there's been 3 NBA players who have become embroiled in these controversies. It was Jonte Porter, who's the younger brother of Michael Porter Jr. He was a fringe player.
Don't be alarmed, Ben. That's just the opening bell. Keep going.
Opening bell. Big moment.
Yeah,
big moment here. There was Jonte Porter. He was banned from the NBA for life for betting on games. He was a fringe bench player. So that was a big deal, but it was like, okay, bench guy involved in some betting situation. Terry Rozier, he is on the Miami Heat. He was reportedly under investigation, and the status of that is unclear, but it hasn't come out that that's over with. So it's possible he's still under investigation. And then now we have Malik Beasley. So it seems like it's a trend. Although one thing that I heard and speaking to someone the other day that I thought was interesting was this idea of like, well, now that sports betting is legal, yes, you will hear about this more. This was happening beforehand, but it was on the black market. This is what is supposed to happen. We're supposed to uproot the people that are doing things wrong.
Fascinating. I mean, it just doesn't seem worth it. I think of the documentary about those NBA refs in the 90s, and the guy made like $7,000. It was something crazy. I'm like, you were working with the mafia for $7,000.
Tim Donaghy, it's interesting. I'm sure that the NBA does not want people to tie these things together, but it's an obvious tie. I mean, they had that big scandal. Now here we are, decade and a half later or so, sports betting back in the fold.
It's a degen economy. We talk about it all the time here. It's all one and the same, and so everyone's kind of got that in them, I guess. Even if you're, rich, powerful athlete, you wanna play the game like everyone else. But just trade options, Malik Beasley. You can do other things.
Go on Kalshi.
Plenty of lottery tickets out there. You don't need to bet on sports.
I do get the appeal though, especially a prop bet. It's like, oh wait a minute, I could actually just miss this shot and make my friend some money. What else in it, like, before we turn to general market news, Ben, are there any other themes or trends you're seeing in this like intersection of sports and business that you think are interesting for investors to be aware of? I think one thing I saw, actually I want to ask you about, was this MJ card that sold, and just like the state of the collectibles market, what that looks like right now.
Well, so as I said in the intro, front office sports, it's the business of sports. The business of sports and all aspects is on the rise, and that goes for collectibles too. So you're showing the story right now. This Michael Jordan signed rookie card sold for $2.5 million at auction last week. The winning bid was the only bid. It was a $2 million bid. There's a 25% buyer's premium fee that was paid, so that is how it got to $2.5 million. I spoke to a couple of experts who said they were really shocked by the price, and also kind of the mystery around there being only one bidder seemed weird. But the trend of collectibles being worth a lot of money and this being a bigger space is not, that's definitely a thing. So it's, even though that particular auction was kind of mysterious and weird, it's not that shocking. I mean, Michael Jordan, he's the GOAT. A signed card by him, a rookie card, mint condition. It's not, people are going to want to pay for that. It's a valuable asset. And that kind of speaks to the other broader trend that I'm talking about, is that sports as an asset class, to pitch my newsletter, which is called Asset Class, which comes out twice a week. You can feel free to go subscribe, anyone. We talk about everything asset class related, and sports has really become its own asset class, and it is developing at a crazy rapid pace. Everyone wants to own a piece of a sports team. As we talked about before with the crowdfunding thing with European soccer teams, everyone, even if you're not a rich billionaire, would love to own a piece of a sports team, and there are more opportunities to do that now. And this seems like it's on the rise, and there's a lot of tentacles that can come from that, because is every sports team's value just going to go up and up? Not every sports team, but especially in the pro leagues, I mean, we're seeing record after record be broken every time there's a deal.
Yeah. Are there any theories of who bought the card? Was it like Scottie Pippen or something, or like what are they?
It's a good question. I mean, anything that I say would be pure speculation.
Yeah.
The theories that I heard was, so Michael Jordan signed, I think it was 9 cards at the secret signing in Florida, I think last year, which is very unusual. Michael
Where
Jordan,
in
I believe.
Florida?
Yeah, good question, right? Michael Jordan has some deal with Upper Deck. He usually signs only Upper Deck cards, from what I know, but these are Fleer rookie cards, so that brought the value even higher. As to who bought it, the jury's out. I asked the auction house Jupiter, which is backed by Pharrell Williams, the big time music producer and singer. They would not tell me, but that's normal. These auctions, they don't usually release the buyer info. The buyer only proclaims who they are if they want to be public. So I'm not sure we'll ever know.
Fascinating. Well, alts are always interesting to look at, because usually they're not correlating with the stock market as much as you'd think, but on the sports momentum, it seems like there's something there. Ben, that was awesome. Thanks so much for the headlines. You're welcome to stick around with us where we talk about general market news. We might hit on a couple companies you have a point of view on, but if you got to bounce, we understand as well, and appreciate you stopping by.
Yeah, thanks so much for having me. I'll stick around for a few minutes and then
Okay.
I'll bounce to do my day job.
All right, let's go to the markets. We are open today. What are, tomorrow we got a half day in the trading, and then we're off, and then it's kind of hitting reset. What are the big things you're watching the next day or so, and then kind of as we head into the second half of the year?
Yeah, I think most traders are watching, hopefully, the beach and some waves roll by instead of their screens. Trading volumes are down. It's going to be a slow rest of the week. Next week will be interesting. Basically, yesterday we saw the start of a rotation trade where a lot of the kind of like high flying tech stocks that have moved quite a bit to the upside started to see some profit taking, and we saw rotation into some of those boomer-esque stocks that I talked about last week that are playing catch up. So United Healthcare, Pepsi was on the move, Paramount Global, like all of these kind of left for dead stocks that hadn't really moved. We're seeing some rotation there because people are saying, well, I'm still bullish, but I can't buy Robinhood after a 100% run in 3 months. So I'm going to buy, a catch-up play here. And what I actually started doing on Stocktwits and through our newsletter and all our different channels is basically highlighting 2 ideas per day that I'm seeing in the Stocktwits community. On Monday, Webull was one of them. I know you guys touched on it yesterday with Jake.
Yep.
As a catch-up play, but we're seeing situations where sentiment is running up ahead of price. People are betting on like these catch-up plays working. And so I think Webull is one. And then, Luckin Coffee was another that has basically gone nowhere for the last 3 or 4 years, but just broke out. It's a Chinese coffee chain. They just opened their first New York City location yesterday. And so that kind of got the buzz going again. And those are 2 areas that the Stocktwits community is focused on right now.
I remember Luckin from 2020. Wasn't there some weird thing
Yeah,
going
they had
on
a
with?
whole accounting scandal. Obviously,
Yeah.
being a Chinese company, there was a lot of questions around their accounting and how they were reporting revenue, I believe. So yeah, they went from like $50 down to $3 or $2. So it was a huge drawdown. And then yeah, over the last 5 years, they've really spent time rebuilding their business, getting their books in order, whatever, and now they're back towards those highs. So this is an interesting one because this is a cult-like stock that retail stuck with throughout all of the negatives and are now reaping the rewards. So there's a case study somewhere. I'll try to surface it on Twitter again, but we did a case study in 2023, basically looking back on like people that had held Luckin through that drawdown, even bought way more during it, and then saw significant upside when it rebounded in 2022, 23. So if those people are still holding it, they're doing pretty well. But yeah,
Good
catch
on
up
you.
plays and just other names that have not run so far.
Yeah. Let's go to a name that I think Ben will have some takes on too. And I want to hear your point of view on the technical side. But Nike, they reported last week. Nike, interesting inflection point for the company. They got the new CEO in. They're trying to go back to their roots. They're reorganizing internally around sports as a thematic way of grouping employees versus the way they had shifted it over to maybe by function. The street liked their earnings. I'll start with you, Tom. I'll start with you and just what you're kind of seeing sentiment wise on Stocktwits. But then Ben, I also want to kind of on your side, like in terms of momentum, like can they get their mojo back? But let's start with you, Tom, on Nike.
Yeah, sure. I'll keep it brief. Overall, this is one of those turnaround type stories like Intel, like Paramount, like beaten down brand name that's 50, 60, 70% off its highs. People look at it and say, I know they have problems, but like they'll figure it out at some point. So if I can get Nike at a 70% discount from where it was trading 2 years ago, I'm just going to hold my nose and buy. And so we're starting to see, some elements of a turnaround fundamentally. Obviously, we've got new leadership, a new approach, kind of undoing a lot of the stuff that was done by the previous leadership. So yeah, we'll see if it takes hold, but this definitely fits the category of kind of that catch-up trade people are looking for.
Ben, what are you
Yeah,
seeing?
I think Tom said it pretty well. I think Nike, like Tom said, is one of these companies that I think most people would just feel that yes, they are going to figure it out. They're an absolute behemoth in that world. They went through a period of time, sneakers, the secondary sneaker market was a big deal. There were issues with their app, for a time. I think that trend, there's still a trend of, exclusive sneakers and all that sort of thing. But I feel like there was this kind of wave of that and that Nike was riding that wave for a while. And then these recent announcements they made to kind of rejigger their business back to being around sports, there's potential in that. They have all these athletes who are very famous who can help sell products. And I think that they might be starting to get back to what their business kind of foundation was before they just dove headfirst into this whole crazy sneaker market. So that's what I'm seeing. And yeah, I mean, I think, look, they still have to get back to Michael Jordan. You still have Michael Jordan as your guy.
Yeah.
You have all these famous athletes. I think that Nike's going to be fine. They're probably a good bet.
Yeah, it is. It is interesting. You were talking about Cooper, or Shy was talking about Cooper Flack being the next Larry Bird, but he's a New Balance guy, right? What other basketball players are New Balance? That shocked me.
So
Uh,
Kawhi Leonard is New Balance, I believe, as
Okay,
well. I think there's a few others. New
interesting.
Balance in recent years has gotten some athletes. Adidas has athletes. There's even what is it, Anta? I think it's a Chinese brand. They have
Oh,
Kyrie Irving, I believe. He fled Nike and went to them. They might have Klay Thompson too. So Nike
okay.
definitely has competition. More competition recently because
Yeah.
players are going to other places. But you're still Nike. You still have the global famous logo check mark. But yeah, I mean, like with every aspect of all these businesses, there's more and more competition.
Yeah, and it sounds like there's things that trend. Like I remember like 3 years ago, On Running was it. They IPO'd. they're still big, but then it was like Hoka. And then it's
Yep.
like there's these rotations that happen, but then there's the names that have staying power. And it's almost like, how can they endure? I don't know if you guys saw this. There's like these new Jordans coming out that are like pizza themed. I'm going to drop the
No, I
link
have
in
not seen
there.
that.
I thought it was a joke. I saw it on Instagram and then I was like, I must have these. But I guess, yeah, they're inspired by a pizza box. And it references back to the flu game controversy. So yeah, good looking shoes. So yeah, they're still
Delicious.
still got their thing going. Let's check in on to some of the other headlines we're tracking. I was just looking ahead to see what earnings were coming up. Nothing big really. We got Tesla in a couple weeks. We talked about those guys. We talked about Luckin. Let's talk about Tom, you weren't here when we were talking a little bit about Republic, going back to sort of the tokenization and of real world assets. And so Republic platform is offering the ability to own tokens that represent shares of private companies that are harder for obviously normal people to get to. So it is kind of following like what sports did with fractionalized collectibles. It's kind of following that on this side.
Yeah.
What are you hearing anything about that in the community? Do you think this is a space that people who are interested in, growth stocks or more speculative assets would be into?
I think a lot of the ways that these alternative assets are marketed is by showing the big winners. Everyone knows that the, Michael Jordan rookie card went from $1 to, $2 million. And so same thing with wine, same thing with collectible art. Like the allure is that you buy something and then, you wake up 2 years later and it's bought by somebody for 5x and you make a ton of money. So
Yeah.
I think there's some interest there from growth investors in terms of just having a differentiated asset class. I'm always curious with the average returns, like if you went across all of the assets that they list, what that would be. I'd imagine it trades almost like a venture capital or a private equity basket where you have
Yep.
a long distribution of losers and then a couple big winners that kind of make up for for those losses. So I think the more interesting thing for me is like, how do you package it in a way that, a traditional retail investor could, implement in their portfolio without having to actively manage like, oh, I got to, keep up on all the collectible news and buy this one
Yeah.
before it's hot or whatever. Like, how do we create an index where they can just invest in the index and then, the losers drop off and the winners, you get, a portion of those gains. I think once we get to that point, it'll be more accessible, but I think for now it's still a bit of a fringe thing that people do for fun as opposed to a serious investment as part of their portfolio.
That is interesting. Like a venture capital ETF would be very interesting across. Yeah. I mean, it's a totally new type of research and diligence with that too. And I think there's a learning
Yeah.
curve. And to your point, like usually when funds do this, they're diversifying across, different theses or stages. And they know, 9 out of 10 are going to fail. But for
Yeah.
a retail investor, putting all your eggs in one basket, it might not work out so well. So it'd be interesting how people take to this, but it is, some of these names, their companies are staying private longer. Shy talks all the time. He's like, I got to get on Anduril. Like that's the one everyone's like,
Yeah.
how do I get Anduril stock? And prior to this, you're going on these secondary websites trying to buy shares off of, someone who had just left the company, and there's
Yeah.
fees and it's hard to do. You got to know people.
Yeah, I think we will crack the code, or Wall Street will crack the code on this relatively soon. We're already seeing it with other more illiquid asset classes. We have private credit ETFs that just came out. I think that's been a hot area for 3-4 years. Now everyone and their mother is like, how do I get access to private credit? When there's enough demand, Wall Street will create the product. And now that we have an administration that is kind of deregulating and allowing some of these more creative, let's say, ETFs and fund structures to get out there. I think the environment is right for it. So when there's enough demand, I think we will see it. Based on the IPOs that we've seen so far, there's clearly demand for high growth, high brand quality assets out there. Figma obviously is one of them. Let's kind of
Yeah.
transition into that. They announced they're going public. What I didn't love to see is they're trying to juice their return by like saying they had invested in Bitcoin. They bought like $70 million worth of Bitcoin and they have a plan to buy more. So it's like
Oh,
they're
they're one
playing
of
games to,
those.
yeah, like they have a core business, but they're trying to juice their valuation because I'm sure they're a little upset about not being bought by Adobe for, I think it was like $40
20
billion,
bill. I
something
didn't see
crazy.
that. So I follow a lot of like marketing design people. So it was
Yeah.
very, about that. So I don't want to accuse them of financial engineering, but we talked about that last time you were here. Like how aggressively are they buying Bitcoin? Are they up there with like a GameStop?
No, it was
Okay.
just like they
Just a little
sprinkled it
bit.
on as like,
Okay. Got
hey,
it.
let's be trendy and let's see if we can kind of boost our valuation a
Okay.
bit. So
Got it.
they're not full on, going crypto, bro, but I just find like again, it just shows the narratives that are hot. Like if
Yeah.
Figma, which is a legitimate company that's trying to go public, is like, all right, let me sprinkle some Bitcoin on this and hope for the best. It's a sign of the times.
Yeah. We talked about them when they were about to IPO before. Shy and I were talking about them because they're an interesting one. They're very like, if you're in marketing design circles, there's this love of this brand.
Yeah.
And relative to Adobe, it seemed like their financials are pretty decent. So it will be interesting to see sort of where they take this and how that community translates over into uh how they're priced and how they go to market. The S1 was very well designed too, although someone pointed out that it's a nightmare on mobile, which was a huge oversight from a
Yeah.
design company. Um, but yeah, that one's getting out, and I'm seeing there's a couple companies are dropping some headlines today right before the holiday. Microsoft laying off 9,000 people. Just got to squeeze that in before the 4th.
Yeah.
Um, before I let you go though, Tom, I want to like thinking about like reflecting on the first half of the year and then thinking about the second. Do you think the second half's going to be as crazy in terms of volatility and events as the first, or do you think like we're not going to go back there?
In terms of volatility,
Like we had the tariff that we had, like it was the end of the war. We had geopolitical, we had tariffs. It was like do you think it's going to be pretty smooth compared, or do you think this is kind of the new normal?
I mean, for my own sanity and my gray hair, I'd prefer that it would slow down a bit. Certainly been keeping us busy on the news side for the last 6 months. I don't think that it's going to calm down from a news flow perspective. The tariff, like we haven't solved anything.
Yeah.
We
I
haven't
know, yeah,
fixed
we're
any of
literally
the core
back where we
issues.
were.
So, yeah, we're essentially back where we were when we started this. And, the world is, there's still a lot of uncertainty around the Middle East and what's happening with China and onshoring industries and whether or not we'll have a recession and Trump calling Powell an idiot. So, I mean, every day there's going to be something to talk about. In terms of your point around the market, I think the market has seen enough of these headlines where they're less drastically reacting to it. However, at some point we will get out of this Goldilocks environment where every piece of news is viewed as positive and we ignore the negatives. I talked about this with Michael Perek on Monday. We're in this Goldilocks world where no matter what the news is, market looks on the bright side. At some point that will shift. What is the catalyst to get there? I have no idea. Maybe it's earnings season. Maybe we get some initial read-throughs from banks or big tech and they're not so great. But yeah, I think that's something to watch out for. When the environment shifts to people focusing on the negative news, that's when you have to watch out for some serious price declines.
Yeah, I mean, what a time to be in the market. But hey, that's what you're building at Stocktwits. That's why
Exactly. If
everyone's
you don't love this stuff, like that's why it's either you're in it or you're not. Like if you're indexing and just want to focus on, being great at what you do, maybe you're a teacher, maybe you're a doctor, just index and kind of let the world do its thing. But if you're in this, if you're a trader, if you're, a media person, like this is what you got into the business for. So I'm excited. We had a big milestone for our news team. We're now in Google News. So like we're officially
Whoa.
recognized as a publisher. So yeah,
Big.
we're cranking on that end, and our team does a great job at covering kind of all the active stories for the most active stocks in the market. So
I was
check it
gonna,
out if you
Tom,
haven't.
on that note, so when Shy brought up the Tesla numbers, I was Googling to look it up, and the
Yeah.
first article I clicked was Stocktwits, and you guys
There we
were
go.
faster than some of the other ones. Yours had been
Nice,
written
yeah.
2 hours ago.
I'll
was
have
like-
to I'll have to give our news team some props there.
Yeah, I
but,
was like, damn, that's awesome. Because I was like, oh, that's got to be an old article because all the other ones were 5 minutes ago, 3 minutes ago. So
Yeah.
kudos to you guys for building that up, and thanks to everyone for watching us, following us, subscribing. First half of the year, I think it's definitely going to be an eventful second half of the year. But I know I speak for everyone at Stocktwits when I say I hope everyone has a safe and happy and healthy and restful July 4th weekend. And we'll be back right here on Monday morning. Thanks again, Tom.
Awesome. See you guys next week.
Bye.